Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Thanks for joining us on Money FM 89.3, where we've got Asia's financial markets undergoing a quiet revolution. So instead of relying on global capital, more Asian households and institutions are now channeling their vast savings into local investments. HSBC calls this the Asia buys Asia megatrend, one that could reshape financial resilience, investment flows, and the role of Asia in global markets. Joining us today to unpack this is Herald van der Linde. He is the head of equity strategy for Asia Pacific at HSBC. Herald, thanks for joining us today. How are you doing?
Fantastic. Good morning, and thanks for having me on your show.
All right, great to be on. So let's talk about this report that you've got where you're tracking what's called the Asia buys Asia trend, something that's been going on since 2012. How has the growth of domestic savings into local investments surprised you most over the past decade?
Let me tell you something. When I started my career in the 90s as an analyst, most of the key clients that we had that invested in Asia would be based in New York and London, these sort of things. Now, it's completely different. We go to places like Taiwan and Korea and India, because that's where and of course Singapore and Hong Kong as well, and that's because where most of the key investors now are. What has happened is that Asia has become richer over the last 20, 25 years. And what Asians are doing, as they do elsewhere in the world as well, they put their money to work. And where do they do that? They put that very often in the markets that they know best, their local markets. So you get localized regional savings, that could be Korean, Chinese, could be Singaporean, moving across the region. And this is really important because it means that we are not dependent on money that comes from outside the region anymore.
Yeah, so India and China seems to be leading this shift when it comes to getting richer, especially the rising middle class. What specific policies or conditions have allowed them to accelerate faster than their peers?
There's two issues. So, for example, in China, but actually in other parts of the region as well, people have gotten older. We are aging in this region, and a lot of people are in their 40s and 50s, and that is just about the time where people invest more and have accumulated more savings. I don't know what it is with you, but when I was 18 years old, I didn't really have a lot of money to invest. But when I was 30s, 40s, I had some money to invest. So that's one thing. Secondly, it's become increasingly easy to invest in, for example, in the stock markets. Again, when I was 18, you had to go to a bank and fill in forms and bring your passport and you name it. Now you sign up on an app and you can just buy stocks almost immediately. So it's much easier to do so now as well.
Yeah, that's true. And turning our attention back home to Singapore, where we've got MES initiatives like the Equity Market Development Program. How significant are such efforts for smaller markets in Asia?
What they're trying to do is to broaden the Singapore market. And what we see in the region is that when locals get involved with investing in their local market, they go into smaller and mid-sized companies. And there's a very good reason for it. If I would tell you a small company in Argentina, you probably don't know it, or even I don't know it. I've never been to Argentina. But if you live in Argentina, you say, I know that company, I see it. So you feel more confident to invest in such a company. So it is in the region as well. So we see that locals do that more. And this is of importance because these smaller companies, they can therefore get access to money. And they don't have to go to the bank. They can do a rights issue or do an IPO, get money, and invest and grow their businesses. So this is a really sort of important dynamic. And sometimes regulators need to step in to get these things kind of running. And I think that's what they try to do in Singapore. And I wish similar sort of initiatives or other initiatives can be done elsewhere in the region as well. But this is really to get people invested in these smaller mid-caps, get knowledge about them out, and then investors go into that to revive that part of the market.
Yeah, Harold, to your point, it's important for a few reasons, and you point out how it provides access to capital for some of these smaller companies. So that kind of builds a bit of a resilience of sorts for the local economy. Okay, talking about that supply of capital and money, where is it flowing towards? Which are the sectors or industries that stand to benefit the most?
First, we have to see how it's being invested. In Asia, most families and households do not have a lot of stocks in their portfolio. They tend to be big in gold, they tend to be good in property, but stocks is actually quite small. So we suspect, and we see evidence of this, that people are building up stock portfolios. Just to give you a number, the average household in the US has got maybe 40% of their financial assets, so that's ex-property, in equities and in stocks, while in Asia it tends to be anywhere between 10 to 20 maybe or so. So they can buy more stocks, and the ones who benefit from that are the ones who allow that to happen. That's mutual fund companies, those could be insurance companies, those could be brokers, and of course those could be stock exchanges as well, because we've got 2 stock exchanges listed in the region. So those are sort of companies that will benefit from these trends, and are already benefiting from this as well.
Yeah, talking about where money is going, is there also a risk to watch out for when it comes to perhaps over-concentration if too much capital stays within Asia?
Yeah, I mean, this is a bit of an issue at the moment. That's just the nature of the world. We see in the US that most of the performance of the stock market is driven by, say, 5, 6, 7 names, and so it is in Asia. Everybody's in the same sort of corners. Most funds are currently overweight on Korea. Most funds are overweight on Taiwan, because that's where the AI sort of story is unfolding. And I think in the next year or so, we're going to see a sort of rebalancing. But there's a risk if everybody is going for the same story, because if that story turns out to be slightly different than what we initially anticipated, everybody needs to exit at the door at the same time, and you get congestion. That's never good.
Herald, let's take a look at some of the countries, more specifically China, which is sitting on a huge pool of savings, $22 trillion. What needs to happen for more of this cash to move into equities or insurance products?
It is almost difficult to fathom how much money this is. This is the largest cash pile in the world, $22 trillion. Just to give you an idea, if the Chinese households would want to buy houses in the UK and France, they could buy all the houses overnight and refurbishment as well. That's how much $22 trillion is. An enormous amount of money. Now, a lot of that money they won't touch because that's a sort of retirement money they have. But we think about 6 to 7 trillion of that is something they could invest. Now, as I said, there's maybe 10% of that in equities. Maybe they go to 20%. That's 6 to 7 or maybe $800 billion that they could put into the equity market. And we see this is happening as we speak. Year to date, the money that has gone from China into Hong Kong stocks, so-called southbound channels, we call that is about 130 billion. So that's a decent chunk, but it suggests there's more money to come. So that's very positive for the Chinese stock market.
Okay, so when you talk about Asia buying Asia, is it uniform across Asia? What are some of the countries that are perhaps lagging behind, and what can they learn from perhaps the more successful countries in this sense?
It depends really on what these countries have done in order to capture local savings. So the Koreans have put a pension system in place. The Taiwanese have got a life insurance company in place. The Malaysian, Singaporeans also have very good, well-developed pension systems that also allow you to invest in stock markets. In China, they're working on this now. So a lot of, as I just mentioned, a lot of people just sit on cash themselves, and they're starting to invest, and that goes then through the brokers and the mutual fund companies. In India, they got something called SIP, Systematic Investment Program, so whereby every month you put some money in the market, and that is really beneficial to them. And I think they could maybe do a little bit more, but this is already working really good for them. I think in countries like Indonesia, Thailand, Vietnam, what they could do is something very similar to what we've seen in some of the other nations. So either you build a pension system like Korea has done, or China is doing, or you go the life insurance route that Taiwan has done, or, and I think this is probably the easiest way, you set up these sort of SIPs that India has, monthly saving programs that have all sorts of tax benefits to allow local, say, Indonesians to invest in the Indonesian stock market.
All right, Herald, let's wrap things up. So Asia buys Asia. This story continues. What are some of the opportunities and risks to watch out for down the road?
I think some of the opportunities in Asia in general is we've seen a sort of revival in the region again. There's interest in the region coming back again. China is doing a little bit better. Some of the stock markets have performed very well. So I think we're going to see rotation between markets over the course of the next 12 months. That's where the opportunities lie. Maybe some of the underperformance will start to do a little bit better as we go next year. We also see that new markets are emerging. Vietnam might well be included in sort of the investable universe, what we call FTSE and later MSCI indices in the next year. So that's a market where access is going to be probably better as well. That's exciting. And then there's all sorts of other growth areas in the region where markets and companies can do very well. Think about defense. Think about there's a trend to build smaller nuclear reactors, so-called SMRs. It's something that the Indians, but also the Koreans are big in. There are other sorts of new technology trends unfolding, so-called LEOs, low Earth orbit satellites. So they provide sort of Starlink systems that provide Wi-Fi for the whole of Singapore at the same time. So these are new technologies that are developing that create all sorts of interesting growth opportunities for companies and therefore investment opportunities for the people like you and me.
Yeah, exciting times ahead as the Asia buys Asia mega trend continues. So one that could reshape financial resilience, investment flows, and the role of Asia in global markets. We've been in conversation with Herald van der Linde. He is the head of equity strategy for Asia Pacific at HSBC. Herald, thank you so much for your time today.
Thanks for having me on. Talk to you next time.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.